We have a massive unique advantage in this economy to build real wealth. I'm not talking about like 100K or 200K, I'm talking about millions. If you have a stable job and good salary and you work in tech, for example, or you work in any profession where you have really stable income, the interest rates these days are so low. They haven't been this low in like last 5,000 years. My name is Saad Hamid, and in this video I'm going to explain how you can use leverage to build wealth quickly with real estate investing. I will show you my own example so you don't take me as some kind of real estate guru. I'm just an average normal guy like all of you, and if I can do it, I'm pretty sure you can do it as well. The advantage we have is a high salary and a stable industry. This advantage gets compounded when you take advantage of low interest rates. However, few of us are taking advantage of this opportunity, which is weird to me. So I'm going to start this video by using my very own example to show how I used leverage to build massive wealth. You know that this is coming from experience and not from some mystical real estate investment guru. In 2015, I decided that I don't want to pay my rent and pay someone else's mortgage, and I ideally want to live in my own house. But the problem for me was that since I didn't come from a rich, wealthy family, I did not even had enough money to put down payment for my mortgage. I started researching online and I found out that there are FHA loans, which are for first homeowners, and you can really put down like 3% of the total home value, and you can, buy a real estate investment. So now there are multiple disadvantages of FHA loans, and you really should put 20% as down payment if you can. But I mean, if you're broke like me, you just got a new job where you are making like 80K or 60K per year, and you want to buy your house, you should totally go with FHA. So when I found out about FHA loans, at first I couldn't believe it, but as I researched more and I finally felt that I had hit the jackpot. I mean, you can really buy a $500,000 home for a down payment of like $17,500. If you want to buy a house for like $1 million, you can put down as low as $30,000. There are some caps on buying, but I mean, a $500,000 home with a $17,500 down payment is totally realistic. I know it sounds risky. I mean, you must be thinking that this guy is a walking buffoon. I mean, he's asking us to take insane leverage. When you think about it from point of view of a guy who grew up dirt poor and he only has these $20,000 in his savings account, it doesn't sound too risky. What's the worst that can happen? Let's talk about it. I have a good job, I have a good salary and a stable industry, so I should be able to make my mortgage payments. But let's say that I lost my job, so what will happen? The worst that is going to happen is that my house will go into foreclosure. I will lose like $20,000. So when I thought about it from this point of view, I was even more convinced that I have to do it. The FHA program is made for people who have good salary, but they don't have enough savings to put down payment for their house. The great thing about the FHA loans is that you can actually refinance them as normal home loans once you have built up enough equity. So what we can do is that once either the house has appreciated to the point where you own 20% equity in the house, or you have actually owned 20% equity by paying down mortgage installments every month, we will refinance this loan and we will get rid of the FHA insurance, or they are, I think, mostly called PMI payments, and that should get us some real nice cash flow. For me, this happened within few years. I think around 2017, I did a refinance of my 5-year fixed mortgage. The interest rates were to go up by 1% in 2020. I got the house under 40K. That includes my down payment and all the closing costs. The total value of the house was around $35,000. In 2015, rates were so low that I had a 5 years fixed mortgage for 3.3% interest rate, and it was to go up by 1% in 2020. The house was a multi-family, so I lived in one part and rented the other part. My total payment, mortgage plus insurance plus installments, was around $4,400. My rental income from the other side of the unit was around $2,300. So I actually paid less than I was paying to live in someone else's apartment. And while I was living in my own place, I was getting rent, and I was using that rent and my own money to build equity in that house. I decided to refinance the house. By this point, the property value had gone up to $700,000 in my area, so I had quite a bit of equity in the house. After refinancing, I got quite a good amount of money out of the house, and since it was a traditional mortgage, I no longer had to pay PMI payments, and I used that money to put down payment for another property I bought again. And here is the most amazing part. Now I rent the whole building, both sides, and the house actually cash flows $1,000 every month to me. So let's talk about advantages of this strategy. Low interest. I mean, you can literally take like $500,000 loan at an interest rate of 3%, which you have to pay for 30 years. And this is the most interesting part. You can only do this with real estate. With stocks or any other investments, no one is going to lend you $500,000 at 3% interest rate for someone who has no other assets, and all you have is like $30,000 to put down payment for an FHA loan. There is really no other asset except real estate which will allow you to get a loan of $400,000 by paying $100,000 in down payment. I mean, rates these days, I think they're around 3%. You won't get this interest rate on buying a business or, stocks, margin trading, anything. This is only possible in real estate, and that's the biggest benefit of this. If you have a stable job, good salary, and you have a little bit of saving, like $30,000, $40,000, better if you have 20% down payment, but still, I mean, FHA loans are great. I mean, you can get the ball rolling very initially in your career. So we got the leverage, but what's the point of it? The point of it is that you can build serious, massive wealth. There are multiple ways real estate makes money. Number one is with rent payments. Number two is that you actually build equity in that property which you bought. And number three is that the house value actually goes up the longer you own the property. I bought the house for $500K, but when I did the refinance, it was around $700K. So we have three ways to make money with real estate, and we are not even discussing the tax benefits of owning a real estate investment. If you go into it for right reasons, in 30 years, it's pretty common for a property to at least double or triple in the value. So if you bought something for $500,000, after 30 years, it's gonna be something like $1 million or $1.5 million in value. Real estate really is probably the only asset for broke people like us to own something for $20,000 or $30,000 and convert it into $1 million after 30 years. Start breathing your market, get a duplex or triplex, and start that cash flow. Start paying for your own mortgage instead of paying for someone else's mortgage. I hope you liked this video, and please subscribe for more videos like this.